Okay guys, we're back with another review of ANN from Synapses Capital, and I was supposed to have done one last night, didn't quite find the time. Before we start, I just want to draw your attention to this, right? If you look here, ICT Concepts will be holding their trader roundup tomorrow, which is Friday the 19th at 7:30 a.m. Eastern Standard Time, and you'll get to chat with the team and a whole lot of other followers of ICT Concepts and Synapses Capital. All of your questions will be answered, and go on ahead and follow ICT Concepts and Synapses Capital, right? Something special is on its way. Now, let's get to the review. Just give me a second here, guys. Right. Before we start, before I get into Euro USD here, let's just pop on over to yesterday's signal from the 17th. Bearish confidence 87%, right? Now, there's a huge disclaimer here where, and I see it for myself, you can get caught up in the lower time frame. So what you would have noticed maybe yesterday is that here is a 30 right here. If you are bearish, then you need a run on sell side, right? Now, we had the initial move up. It ran a bit of sell side here. Sorry, buy side. My mistake. Buy side. Change in the state of delivery occurs here. And price heads lower. Takes out sell side. But then, what happens is, you get a higher run up here to take out this. And then towards the PM session, you can see what happened here. Price actually moved the way the Algo from ANN said it would, right? So with this, it's very easy to get caught up in a low time frame M5 and miss a few things. So a little savvy is required when you deal with such things. At 8:30, right? Where should your eyes be drawn to? So where are we in all of the PA, and where do we need to go to? At 8:30, if you look here, your eyes should have been here, right? That is the buy side that you needed to run if you are bearish, and then form a dealing range, retracement, and then head lower. So you would have been stalking that sell right into the afternoon session, and you can see what happened overnight here. So it's just something I needed to draw your attention to. Don't get too caught up on the actual New York Open or M5. You may get away with the initial moves, is what I noticed. The initial moves do conform to the bias from ANN, and then we get the run up, manipulation, whatever you want to call it, and then the actual move down as per ANN, right? So just be wary of this, guys. Some savvy is required. M15 over M5, I'd say. So like I said, in this case, if you're bearish, then you're looking for a run on buy side, change in the state of delivery, order blocks forming, and yeah, that's what happened there. So that was yesterday, and just something I needed to tell you because it could be two people with the same set of data. One could be hella profitable and the other just get wrecked, right? So just watch out on this when you're using things like this. This is not the be-all and end-all of tools to be using. So let's go on over to today's signals. Bearish confidence 87% on Euro USD. That's a good signal for me. Let's have a look here. M5 do we see anything on M5? Well, first, let's take a look at where 830 is, right here. Long candle down. Not much to work with, to be honest with you. You would have to have a knowledge of PA, and also you'd need to know how delivery takes place, and little things like, for example, if you were to find a setup here, again, if you're bearish, you want to run and sell side, run and buy side, run and sell side, dealing range, and then continuation. So for me personally, nothing forming in here for me. But if we look here, let's try and zoom in here a bit. And this is on M5 now, right? Here we have buy side taken. The candle that takes the liquidity up here gets traded through here. Sell side taken. This to this for me is a dealing range. So when I see something like that, then I am looking for a 50% retracement of the order block or the bodies. And for me personally, this would have been my setup here, short position, trying to go with the bias, right? Already had a massive long candle down, which left an FEG behind, and target would be, let's take a look. Since we don't have any old lows here, we could go maybe 2 to 3 standard deviations. I'm not sure. Let's take a look here, right? Flip the order block, project it down, and yeah, 3 standard deviations away, you would have gotten away with this trade quite comfortably, right? Yeah. You could have taken it, I suppose, to an old low here, or to a point where the highs of down candles are being traded through. So here, for example, right, all of this running on sell side. Here suddenly we get the high of this candle being traded through. Once I start to see things like that, especially fair value gaps being closed above, I want to be out of it just in case, right? So that's Euro USD. It would have offered, if I had taken it to 3 standard deviations, about 274 pips. Next one, I think it's GBPUSD. Let's take a look at what it is. Bearish confidence 83%. So GBPUSD, 8 a.m. is 8:30 is here. Right. In this case, if the bias is bearish, right? Unlike Euro USD, where you saw that we didn't have any pullbacks into the fair value gap, you can see that there is a fair value gap here that was formed. And if I'm bearish, then I want to see the fair value gap being respected here. And more so, I want to see some sort of buy side and sell side taken. So if I'm taking my entry in here, my stop would be a hard stop above here. Alternately, if I wanted to get it a bit tighter, once the down candle here gets traded through, another fair value gap forms here, stop above here, and you can see that if we flip the order block again in this case, we could have got 3.5, even 4 if we pulled it, right? Let's call it 3 to be conservative. 3 standard deviations here, and that gave us roughly, let's take a look. And I'm going to try and be as conservative as possible. That gave us about 300 pips, right? So good enough signal to have taken. Next one. Next one we have is AUDUSD bearish conference 96%. AUDUSD. A30 puts us here. A lot of long down candles at 8:30, and would I have taken anything in here? To be honest with you, this would have missed me personally. I don't see any of my entry models that I would have used here, not on M5. I'd like to say I would have taken this retracement here after this candle took a high and then the low. But I'd be lying to you because I probably would have missed this, right? But you can see the signal given itself, pretty solid, and it gave you all of this down move here, right? So bias direction, spot on. NZDUSD, bearish confidence 51%, right? So like I've mentioned before, and what I've been told is that we need to look at confidence rates above 75%. So let's look at NZDUSD just as an example and see how things can go wrong if you don't pay attention. 830 again, long down candle. Again, this would have missed me, to be honest with you, but at a 51% confidence rate, this still gave you a lot of downside. So coincidentally, that was okay, right? I wouldn't have even looked at it at 51% confidence. USDCAD bullish 97%. USDCAD 97%, and this was today 8:30. Here we go. 8:30. There, right? 8:35. You can see that before 8:30, right? A dealing range was created here when we took buy side, sell side. We took buy side. It created a dealing range here. Retracements would be for buying. Alternatively, highs being broken, leaving fair value gaps behind. ICT 2022 mentorship model here. Highs being broken, leaving FEGs behind. Old highs become fair value for buying. So you could have gotten a few entries in this point here. Personally, I would have targeted these up here. Sorry, 1 second. I would have targeted at least here, these relative equal highs here, and these failure swings up here. So what does that get us? Let's take a look. Say we entered inside the fair value gap and we got about 200 to 300 pips out of that. Again, signal was spot on. USDJPY bullish. USDJPY, and it'll be unrealistic or an unrealistic expectation to expect everyone to be trading 1, 2, 3, 4, 5, 6, 8 signals, right? So stick to the ones you are confident with. USDJPY bullish confidence of 63%. So I'm not expecting much. I probably wouldn't have paid attention to it. Then again, you'd look for, if this is continuation, I'd like to say again that this would have probably missed me. I wouldn't have paid attention to it, but you can see even at a 60 somewhat % confidence rate, this still did go up a lot. So the bias was correct. The percentage probability was not in favor of taking that, right? USD Chief, again, 64% bullish. Let's go. Right, at 64% confidence rate. This for me is my model. Highs being broken, leaving fair value gaps behind. Here we go. ICT 2022 mentorship model. This one would not have missed me. I would have entered actually here. There, right? I would have entered once the high of the FEG was taken, and then we started to trade above down candle highs, which came here. anything high time frame to have targeted, nothing. So again, if you are entering things like this, then you are either going to aim for a certain number of pips, or what I'd like to do is put a fib onto a order block and aim for three to four standard deviations, right? So a shitty confidence rate, but a good bias in hindsight, right? A good bias. I would not have even looked at that. And then GBPJPY bearish confidence 64%. So GBP, the last one, GBPJPY. 830 comes in here. Highs being broken, leaving fair value gaps behind, like you see in here. Price pulls back in here. And off to the races again. You see the same thing happen in here. Highs being broken, leaving fair value gaps behind. Price retraces and heads up. Now, if you are an ICT student, then you would realize that retracements, and if the drawn liquidity is higher, right, then retracements seek imbalances, and consolidations seek equilibrium, and expansions would seek order blocks. Reversals, on the other hand, would seek a pool of liquidity. So if you are bearish in something, then you would look for the most obvious liquidity pool. Take a case in point here. If you expected this to go higher, then you want to see a run on sell side, like so. Change in the state of delivery only happened on this M5 somewhere around here, or at about 50% of this candle. You could consider that a market structure shift, and then price moved up. So like I said, you have to be savvy about these things and take into account what time frame you're looking at. M15 may have been a bit better. Yeah, so that's it for today's signals. You can see that each and every one of today's signals played out, even though 1, 2, 3 of them had a really low probability of in the 60s. And to be honest, because I've been told, I would not even look at anything below 75%. So it left you with 1, 2, 3, 4 good pairs to look at with high confidence rates, and every single one of these have done what the signal said it would do. Right, so that's it for the review on all of the signals today. Gold has been taken out. You would notice that gold is not here. The guys, something technical, they are working on it, and it should be back. But just a friendly reminder again, 7:30 trader roundup, and make sure you join this, right? Join this, follow Synapses Capital, follow ICT Concept, Future FX, and myself if you aren't already. And I think tomorrow is going to be an interesting day for everyone. Let's put it that way, right? I'm expecting a few things to happen, so keep your eyes peeled. I'll post this to YouTube, and again, if you are watching this, please like, share, and subscribe. And I'll catch you guys later. Tomorrow, I'll try and do another one, or something even better. If you stay tuned, you may catch something even better. Cheers.